Boom! What's going on, guys? Welcome into Energy Newsbeat here on this gorgeous Thursday, January 28th, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. How you doing today, my man?
It's a beautiful day in the neighborhood, and I am tired. There's some crazy news out there.
Yeah, unfortunately, we're going to talk a little GameStop at the beginning because we have to. I mean, some of these short squeezes are unbelievable. We'll cover some other things. You can check all that and a bag of chips out on the rundown to my left. But first, guys, just subscribe to the world's greatest YouTube channel, Energy Newsbeat. Smash that like button. We really appreciate all the support we've been getting. Also, the best way to stay up to date on all of your energy news is via the world's greatest website, EnergyNewsbeat.com. Hit the little notifications button in the bottom right corner. It's legit just an IV of news all day, every day. It'll be the best decision you make, I promise you. But let's go ahead and just dive into the equity markets today. Holy, there's so much to spend all 20 minutes of this show talking about how the U.S. equity markets played today, but I'll just run you quickly top line numbers. SPY was up 1.75 percentage points. Nasdaq was up 1.8 percentage points. Dow Jones up 1.7 percentage points. This is interesting, Stu, because yesterday, excuse me, yesterday we saw the same thing that's going on with the short selling. You know, if you're following Twitter at all, if you're on Reddit at all, if you watch CNBC, Fox Business, all you're hearing is GameStop, AMC, BlackBerry, Nokia. Today was American Airlines hit up heavy. So there's really two different realities that are happening. There's this entire segment that's, you know, of Reddit short sellers that or short sellers getting pushed out due to a lot of this fervent buying. And, you know, we could spend a whole segment talking about how I think there's some insane criminal activity going on from companies like Robinhood, Interactive Brokers, which I am a customer of, which, not that I really want to be trading GameStop. They wouldn't let me today, Stu. I wasn't allowed to today, even if I wanted to. We'll be talking about all of that tomorrow on our segment with DRW. I don't want to spoil too much, but all I'll say is, whoo, there's probably a class action lawsuit coming out from people who, yeah, I may join it because not that I want to trade GameStop, but the fact that people were blocked out of being able to trade. So we'll talk about all of that tomorrow. On the actual U.S. equity side, you know, all SP 500 sectors, about 11 of them, they were all up today. Tech-heavy Nasdaq, as I mentioned, was up 1.4 percentage points, boosted by Disney and American Express. Couple things here. It was interesting. Week-to-date gains, Stu, on GameStop, what do you think? Week-to-date gains on GameStop, what percent?
43.
300%, just close. It's shares of GameStop has soared more than 1,300% in January alone. There's some money being made. Like I said, I could dive two more. So the overall equity markets, they're going absolutely insane. Luckily, overall markets did buoy themselves up a little. My brother was texting me last night. I'm in everything but GameStop, and my investment went down. How does that work? I was like, dude, the markets don't make sense to me anymore. So, goodness, we see broad markets rise today. Let's move over to the energy side quickly here. Crude oil was down a percent even, 52.32. Back end of the curve, down a percent, down to 50.11. Part of this was due. There's a new. I mean, what's funny in all of this is we've sort of forgotten about the coronavirus. The coronavirus is now sort of it's gone because no one's talking about it because everyone's talking about GameStop. What I think crude oil is reacting to is some of these new strains coming out south. We have the UK strain, we have the South African strain, which was now detected in South Carolina, excuse me. So there's some interesting things going on with COVID, the vaccine rollout. It looks like Johnson or who is it going to tell me? Blue Cross Blue Shield is now taking over the vaccine distribution in California. I mean, if you want the government to do a job right, just hand it to the private sector. So I actually applaud the people over there. But it'll be interesting to see if it actually changes anything. But I think that's what's buoying crude oil prices. Now, speaking of natural gas prices, they're down 3.9 percentage points after a draw, but not a big as expected draw. We were hoping to see about 140 billion cubic feet drawn in natural gas stocks. We only saw 128. So that brought gas prices down, even though the fact we're supposed to see some colder weather, some of the models in that 10 to 50 day time period turning warm, which is why you see the back end of the curve was only down about one percentage point to $2.91. XOP, which is our E&P securities contract, was up about a tenth of a percentage point, just at 66.95. OIH, though, which is oilfield services, great day, up $3.65. That's 2.25 percentage points in the index, currently trading at 165.91. Let's go ahead and look at some of our biggest movers on the day. We're still net up, but we do see some nice losers on the downside. CVR Energy, they're down 4.9 percentage points. Delk Holdings down 5.3. Murphy Oil, they had earnings today. They weren't good, down 6.1 percentage points. We'll cover them. And PBF Energy down 16 percentage points. Let's go ahead and turn ourselves to the upside. Camber Energy up 77. Whoa! Look at these numbers, dude. Whoa! Houston America up 31 percentage points. Sanchez Midstream, man, if you're an investor in Sanchez, it's like riding the Hulk down at Universal Studios. It's up, down, all over, flips, left, right. You don't know where it's going. Today, they're up 46 percentage points. Camber Energy, 77. U.S. Energy Corp, 77 percentage points. Tense Gas, up 219 percentage points. New Concept Energy, with the total volume currently traded about 78 million shares, market cap of 138 million. They are up 1,000% today, Stu. They were trading at $3 yesterday, currently trading at $27. Holy smokes. I will do some investigating on that while you're giving us the rundown on the international news desk. Crazy stuff going on.
Man. Say that again?
1,000%, Stu. I mean, either this is wrong or we've got some research to do.
What's a few decimal points between friends?
Yeah, no kidding.
Hey, the first one here is indications from Saudi Aramco CEO leverages technology to boost sustainability. There's a couple more things than just sustainability. Let me read you a quote from Amin Nasir. He's the CEO. Our reliability for 2020 is 99.8%, one of the highest in the world in terms of delivery. And that is using data analytics, simulation models, managing reservoirs, and helping Saudi Aramco hit a 70% recovery rate. That's pretty darn high, dude.
It's a pretty good recovery rate.
Do what?
It's pretty good.
It's nice, very nice. Nasser also indicated that Aramco has benefited from the acceleration in technology in discovery, recovering, maximizing, and as well as carbon emissions. So hats off to him. And also the Prince, they are announcing a lot of new IPOs, Michael.
They are. And why would you not in this market? You know, I think people, you know, there's this idea that, you know, why are all these IPOs, why are all these SPACs happening? Well, Stu, they're happening because there's money available. You know, it's, you know, yep. Do I think some of these SPACs and some of these IPOs are premature? Some of them may not be the best investments. No, but they're taking advantage of a market that is very open to public money. I mean, if you're a private company looking to go public, now's the time. Why not?
We don't have a license to give advice, but let me just say this. Saudi Aramco, Saudi Arabia, they are going down the oil road. They're going down the renewable road. And they're seeing all these other things. I like the way they're thinking.
If you want to take a vow of poverty, then yes, I will give you investment advice. But unless you want to vow yourself to a life of poverty, we do not give investment advice.
Okay, I got two stories. Besides being in a fight with a lady on Twitter that's giving me stories from me.
We'll keep you off it. Don't worry. We'll get back in.
She gave me a story from a year ago saying this is current news. I'm like,
welcome to Twitter, Stu. Welcome to Twitter.
Oh, no wonder I hate it. Okay, first story up. We've got China, our friends over in China, and the title is China Redefining Growth Supports Crude Demand. There's some real sharp nuggets in this one. And this is the refinery aspect of it. China's got the coal. They've got all the fossil fuels going up. They are the largest in the renewables. They just have the largest new demand for energy. And so their crude refineries, the government wants control. They've added 2.7 million barrels per day of refining capacity in the last 5 years. That's huge. So they are going coal, they're going renewable, and it's because they need a lot more power. Okay, along this line, here we go. The binge on the new imports, this goes into what you and I have been talking about, spoofing. I'm sorry, I just got to bring this up almost every day, spoofing and all that kind of stuff. Indonesia, oh, yeah, doping. Who would have ever guessed we'd be talking about doping on this show? And that is because Joe Biden is taking a little bit of a softer approach. The common way to disguise these origins of cargoes from the Indonesia seizure came 2 million barrels of Iranian crude on board a tanker heading to the U.S., and it's going to China. Let me give you this one. Iran, out of this quote from Citigroup's Morse, he says, Iran is starting the year as the biggest wild card for oil prices. It's unlikely to be a renegotiation of the nuclear deal, sanctions relief from the U.S. Unbelievable. Those two stories go hand in hand, and Iran is our single biggest issue with oil prices.
It's going to be very interesting to see how the Biden administration handles the Iranian institution. I mean, if China's just going to continue to import at will, regardless of sanctions.
Also, OPEC and OPEC Plus, how are they going to handle their children? You know, that newspaper's got to be pretty big to beat them in the nose like a puppy.
They really do, Stu. Well, we appreciate that. All of those stories via the world's greatest website, energynewsbeat.com. All right, I've got 4 stories here. We've got 2 earnings I want to start with, but before we do that, we need to quickly cover natural gas stocks. As I mentioned, we were supposed to see 140 billion cubic feet draw. We only saw 128, which is partly why you see natural gas stocks down today, even though there is a weather-based trade. So that's what you got to remember. Monday, Tuesday, Wednesdays, and Fridays, weather-based trade. Thursdays, it's a stock trade, and we didn't quite see what analysts were expecting, so that's some of the reason why you see some of the downside on natural got. All right, first, let's just go ahead and cover Tesla. I mean, what's hilarious is we're talking about these wild valuations in the equities market, and we don't even get to talk about Tesla because they're just chilling. But for the first time ever, Tesla has reported a revenue in the fourth quarter of 2020 of $270 million. The Palo Alto-based firm stated that they had 24 cents in terms of earnings per share via a GAAP basis for the quarter that ended December 31, 2020, and 64 cents for the full 12 months. Full year revenue was $721 million. Quarterly income led by gross sales of the corporate's Mannequin 3 and Mannequin Y electrical automobiles was $10.7 billion, and the annual tally was the best ever at $31.5 billion. So, the quote out of the letter to shareholders is this: regardless of unexpected challenges, we outpace many traits seen elsewhere within the business as we considerably elevate volumes, profitability, and money technology, Musk stated in a letter to shareholders. And it's interesting. The street didn't like this answer. They didn't like the fact that they only had 24 cents a share. The problem is, where does Tesla go from here? It was trading at $800. It backed off about 2% today after these numbers dropped. I think that's what the market's saying is, we've already traded the rumor, folks. We bought the rumor 6 months ago on Tesla. The news coming out now don't move the markets. I mean, unless he had a cure for COVID, I don't see how Tesla continues to rise as these quarters. I mean, don't count him out on it. But all that being said, I mean, currently trading $864. That's 2.1% off the price of what had happened. The funny part is this. So $401 million of that revenue, Stu. Well, not revenue, but they got $401 million from selling regulatory credits in Colorado or in California.
Exactly.
So boosted their total haul in 2019. So listen to this, Stu. Doubled their annual gross sales to $1.5 billion of energy credits. That's a good guess.
They're not making money on their cars. They're making money on their energy
Does it
credits.
matter?
Nope.
No, it
I
don't
think
matter.
it
Tesla,
doesn't matter.
decent earnings, but down 2 percentage points. On the oil side, Murphy Oil and Gas, an offshore oil and gas operator, came with earnings today. Not good today, guys. $172 million loss, or about 1.11 or $1.11 per share on a diluted basis. Adjusted net loss, which excludes discontinues and one-off operations, was $14 million. So they're still losing even on an adjusted basis, about 9 cents a share. Again, this sent stocks down about 9% today. I'll just read you some top-line numbers. Adjusted EBITDAX, again, who knows what that means? $271 million, $19.77 per barrel. See, this is what they're doing. Now that we're coming with EBITDAX, which is interest before earnings, tax, amortization. What's X again? I forget.
Exploration.
Exploration. Well, now they're calling it per barrel of oil equivalent sold. Just tell me what it is per share. Like, now you're just this is just, it's, oh, look what the hand's over here, but here's the real number. Preserved liquidity, $1.7 billion, $311 million cash on hand.
Yep.
According to their press release, they maintained capital discipline. Established a greenhouse gas emissions reduction goal of 15 to 20% by 2030 from 2019 levels, excluding Malaysia. I wonder what's going on in Malaysia. They entered into an initial crude oil hedge for 2021-2020, bringing the total contracted position to 45,000 barrels of oil a day and 20,000 barrels of oil a day, respectively, for those two. To give you an idea, they had how much production? 149,000 barrel of oil per day. So they got about a third of their production hedged. Go a little higher with these prices, folks. So obviously the street didn't like that, and that's the problem. If offshore can't make money,
we're in trouble.
Yeah, we're in trouble. So again, we're in trouble. And these guys are also in the Montney. So, I think they're a solid company. It's very telling when they release an earnings that they're not great, they're not bad, especially in COVID times. And the market says, nope, I'm out. Next story, Stu. This is great. Headline. EQT and Project Canary partner on certified responsibly sourced natural gas pilot. Stu, this is the ESG take I was waiting to hear. EQT today announced its commitment to a pilot project to demonstrate production of responsibly sourced natural gas for use in domestic and international markets. Here's the quote from Toby Z. Rice, president and CEO of EQT. This partnership aligns with our commitments to ESG leadership and to the meeting that evolving needs and expectations of our stakeholders. It further confirms the emerging domestic and international markets for this differentiated commodity and the important role that United States LNG will play in the future energy mix. A+ to the IR guys over at EQT. Responsibly sourced natural gas. I love it. It's just American natural gas. It's soon going to be like blood diamonds, I think. Everyone wants to know where your diamond was sourced from. I think that's what it's going to start becoming. Blood oil or blood natural gas.
Como doesn't care. He's still importing natural gas from Russia.
But this is the first time I've publicly seen somebody come out and be like, yo, we don't buy from Russia, who straight up just gets me. CEO Chris Romer, Project Canary, his quote was, stakeholders and investors continue to expect demand, more transparency, more verifiable, trusted data, and more overall ESG-related performance progress across the energy sector. This private project will utilize our differentiated technology to provide trusted and independent data, demonstrates continued responsiveness towards meeting and exceeding those growing stakeholder demands. Woof. I love it, Stu. I absolutely love it. I need to know, what's your take? Responsibly sourced natural gas, RSG.
It's 10 o'clock. Where are your kids, if you don't remember that one? But I'll tell you, one of the funny things is you sit back and take a look at, you've nailed it in the past, Michael, with all your research you're doing on ESG. The number one problem with ESG is accountability, how to prove it. Project Canary is very good about being able to say, hey, wait a minute. But now saying that we're responsible and having the responsible
well, there's two sides to the coin. There's the how do we collect this data, and then it's how do we report this data. I think the industry's done a great job. Project Canary is an example. A company called Ajax Energy did a good job. There's all these different companies that emission monitoring technology isn't new to the marketplace. We've been doing this for years now. I think there's an interesting point to talk about. How do you get this data in the hands of the people that are going to make investment decisions?
Exactly. And that step is missing in the market.
Yeah, someone should do something about it. That's all I'll say. Last M&A thing before we let you get out of here. You know, if all of these Tall Oak 2, Tall Oak 3, all of these names get you, well, I've got one for you, because both of those, you know, whatever Tall Oak 2 is and Tall Oak 3, they just got acquired by Tailwall Capital. But in all seriousness, NCAP Flat Rock Midstream, a private equity-based midstream company, today announced they have sold Tall Oak 2 and Tall Oak 3 to Tailwater Capital. Give you guys an idea. Tall Oak 3 was 120 miles of low-pressure and high-pressure pipelines in the Aramco Basin, which recently is fully developed in the Panther Creek plant. So to give you guys an idea, not even actually, this is in the Aramco's in the Stack region of Oklahoma right there. Tail Oak 2. So that was Tail Oak 3. That was the transition that now is going to Tailwater. Tall Oak 3 is a little bit different. So Tailwater's acquiring a majority assets of Tall Oak 3, which is a full-site midstream provider serving its customers in the mid-continent. But also, guys, the Tall Oaks 2 assets in Custer County, Oklahoma, are not included in the transaction with Tailwater, and NCAP Flat Rock Midstream will retain ownerships of those new assets under a new entity called the Oklahoma Stat Gathering System. That's not the name, but whatever, they come with the name. The point is, midstream's getting thrown around on the private equity side. It's interesting to see this deal get done. I'm not too familiar with these two midstream companies. You know, I think NCAP is seeing an ability to get out. Hey, how do we take our infrastructure that we have that we might not be able to expand and de-risk a little bit? So we'll have to dive in a little more of this deal. It dropped last night, but generally, if you're selling midstream, I'm about it, because that generally means you got a good return. Be interesting to see the buyers of these midstreams. How that turns out. I'm generally bullish on owning physical pipeline because it's going to be hard to build new ones. So, like I said, we'll revisit that in 2 years, Stu. How about that?
Oh, I think it'll be before that, because when you start stuffing nitrogen into it, all you got to do is add new generators to carry the hydrogen.
We're gonna have to end there because I can't get you started on hydrogen again. But no, we love that stuff, guys. And with that, we're gonna get out of here. Let you get back to work, finish up your day. Thank you for checking us out. World greatest website, EnergyNewsBeat.com. For Stuart Turley, I'm Michael Tanner. We'll see you guys tomorrow on the Energy Beat.